Robbie Heeger, President and CEO at Endowment, that's Endowment DAO, and Justin Woodward, co-founder of TaxBit. Very excited to have both of you here today to talk about taxation and cryptocurrency, particularly as we close out 2021. Welcome to you both.
Hey, nice to be here. Thank you.
Pleasure to be here, Ash. I love talking about taxes at the end of the year, and this is a very timely subject.
So this is a really cool conversation. I love when we have these kinds of conversations on Real Vision. We have someone with a background in tech and crypto and a tax attorney. This is a cool thing to do to get both of you together to talk about this topic. Let's start with Robbie. Robbie, tell us a little bit about your background, how you got to be where you are today, and your interest in cryptocurrency.
Oh, man. Where to begin? In 2013, I had a roommate who was working at a small company called Ripple. And they brought home all of the marketing materials about Ripple and was like, I'm not technical. I don't understand this. Can you tell me what this is? And so me and my roommates started reading about cryptocurrency, and it blew our mind. And that was sort of the beginning of the investment journey, but it wasn't until 2017, 2018 that I really got into the web development, technical development of cryptocurrency, mostly in the Ethereum space. I spent 7 years at Apple doing operations and decided to make the jump at the end of 2018 full time into crypto. It was clear that this was the space that was commanding my mental energy, and knew that I wanted to work on something that had a social impact component. And that led to the starting of Endowment. Endowment is a 501c3 tax-deductible community foundation that builds financial services for philanthropic activity that's crypto native. And so we're really in the business of taking any and every kind of cryptocurrency and trying to operationalize it for impact.
Justin, jump in. Tell us a little bit about your background and how you got involved in the crypto space.
Yeah, I'm a tax attorney by trade. So I was an early adopter of cryptocurrency as well as Robbie. You know, I was working with large Fortune 500 clients on crypto-related issues all the way back to 2014. Starting in 2017, we launched TaxBit with the idea being that, you know, cryptocurrency is a poor name for the asset class. And in reality, the IRS views it as crypto property, meaning that, you know, every transaction has some type of tax or accounting impact. So what TaxBit does, you know, we've issued tens of millions of tax forms reporting digital assets, cryptocurrency, and it's about two things. It's about, one, making the process as easy as possible on the end user so that, you know, they aren't mystified by, you know, these unique tax rules to crypto assets. But two, it's also, how do we optimize on top of those tax rules? And there's two pieces coming up on the end of the year here. One is if you're in tax loss positions, you should claim those tax losses before the end of the year to increase your tax refund. But two, if you have, you know, large gains that you're sitting on right now, you should use an organization such as Robbie before the end of the year is at Endowment to actually, you know, give charitably, which will allow you to reduce your taxable gains as well on those appreciated assets.
So Robbie, that tees it up perfectly for you. Tell us about the idea. Tell us about Endowment.
Yeah, so Endowment offers donor advised funds, which are the fastest growing philanthropic vehicle in the country. There's over $140 billion in donor advised funds at brokerages that have, you know, associated nonprofits to those brokerages. And basically what a donor advised fund is effectively like a charitable checking account. You take assets that you own and you give them to a fund, and instead of selling the assets first, the nonprofit, in this case Endowment, takes on the act of selling those digital assets. So you give without taking the tax hit, and then we sell it for dollars, and you get to come in and advise your donor advised fund, hence the name donor advised fund. You get to advise on where the money that's in that account gets distributed to, as long as it's a US 501c3. And so we have the ability for users to give to over 1.5 million nonprofits. We've onboarded over 300 different nonprofits. And really, our goal is similar to TaxBit's. Make it as easy as possible to take these assets that live in a very esoteric, metaverse, so to speak, the pop, word of the day, and move them into programs and organizations that are doing amazing real world impacts in the U.S. and abroad.
So walk us through, what would one of these transactions typically look like? Just take us through a typical scenario.
Yeah. So generally, we're approached by users who have large gains, who have bought something at a very small price per token, and now it's trading at a much higher price per token. And what they're trying to do is to give some of that gain away without having to sell it first. And so what they do is they approach endowment, they create a fund. And we offer a very simple donation widget where we connect with a MetaMask wallet or a Wallet Connect wallet, and they send to the endowment wallet address tokens. And we take in those tokens. Right now, we accept over 150 different kinds of tokens inside the app, and we'll accept nearly any cryptocurrency over the counter. And once we take possession of those tokens, we then liquidate them right away for USDC and put that USDC into the smart contract address that represents that user's fund. And the user then has a balance at their fund, and they get to do what's called a grant recommendation. A grant recommendation is when they find a nonprofit that they want to give some amount of the assets at their fund to that nonprofit. And so they say, okay, I want to give $1,000 from my donor advised fund to UNICEF. Right? Let's go with UNICEF here. And we go out and make contact with UNICEF and say, hey, there's $1,000 waiting for you here. All you have to do is provide a US bank account address. And we use the Circle Wire Payouts API to basically transfer that USDC from the chain into their bank account. And just like that, a user has gone from having any number of different crypto assets to putting it into a nonprofit, right, being endowment, and then directing those assets further to another nonprofit. So the critical moment is that first step where they're taking some number of tokens and passing it to endowment. And that's the tax deductible event, right? That's when they're giving it to charity. So other charitable donation platforms, you have to know where you want to give it to in advance, right? You got to show up to the organization. You got to say, okay, yes, this organization, this is what I want to give it to. You give it to them in one transaction, and then it gets liquidated and they keep it. What a donor advised fund allows is for you to come in with a number of assets, put them into a fund, and then determine over time what organizations you want to support with the assets that are sitting in that fund.
And I guess the important point there is the sort of the timing issue, right? Which is you've got this asset that's gone up in value. You may be looking, you think, I think this is a point where I might want to take some off the table, and you don't know exactly yet what you want to donate that to, but you have the ability now to basically push that out of your account into endowment, and then to forward in the future that to the source or the charity that you want to donate to.
Exactly. And one thing to add there is, historically, donor advised funds see about 75% of their business in the month of December, of which, 75% of that happens in the last week of the year. And that's kind of a head scratcher. Like, why does that happen? Well, the reason why that happens is because people tend to not know their final tax obligation until closer to the end of the year. And what they need to do is to make an offsetting gift inside of that same tax year. And what a donor advised fund allows you to do is to kind of calculate your tax obligation, and before the end of the year, make a gift to a donor advised fund without actually having to know where you want to distribute it out to across the board. You can make the financial planning decision separately from the philanthropic granting decision. And that's a huge boost to ease of use and to user experience when it comes to charitable giving. And that's why we've seen such a monumental amount of growth in donor advised funds across the country, because they offer this flexibility. And so we feel that it's important that the crypto community have this tool set available to them, just like people who have stocks or bonds or equities, have this available to them at their Schwab brokerage or at their Fidelity brokerage or at, insert community foundation here.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.